We're live, Ryan.
Okay. All right. Nobody likes to pay federal income taxes. And today we are going to talk about 5 ways that we could eliminate the federal income tax altogether. And well, we're going to have some pros and cons, and each one of us is going to vote. And you're going to see what we really think about these. I think you're going to be surprised by some of these options and what we think about it. So let's jump right in. Well, income tax is a huge topic here, and we've heard Trump talking about eliminating it. We've heard states talk about eliminating it, but today we're talking about the federal income tax. And so I'm going to give just a little quick background here, and then we're going to dive into some of these options and see what you guys think about these. So should we get started?
Heck yeah.
So the income tax, it's a significant portion of the government operations. So it includes Social Security, the federal income tax, that is, Social Security, Medicare, defense, social programs, and the revenues received by the federal government in 2024, and this was $4.9 trillion. And so individual income taxes was the largest contributor. So they were 49.5%. That's $2.43 trillion. So 49.5% would be coming from the individual income taxes. And then payroll taxes was the next at 1.7 trillion, which is 35%. And then corporate income tax and other sources made up the rest, which was around 15%. So you can see it's quite significant here. If we're able to eliminate that, that means we would have to take some drastic action to either increase the revenues or decrease government spending. So I want to give a little context here. So all of us who received a paycheck or filed taxes paid income tax to different degrees. But let's say in 2022, the average taxpayer paid $14,000 in federal income tax, $14,000. So you could maybe buy a car, something like that, whatever it is, $14,000. In 2023, it went up to $19,000 per taxpayer. Now, some interesting facts here are the top 50% of taxpayers. What percentage of the total federal income tax receipts do you think come from the top 50% of taxpayers?
I know it's most of them. I know most of the tax revenue comes from the top 50%. Actually, most of it comes from
correct. You're correct. It's most, but I would actually not I would not use the word most to describe it. It is 97% of the total federal income tax.
Wow.
For the top 50%. Somebody in the comments double check my stat there. I don't know.
That's crazy.
My internet searchability might be going wild there. Okay. Wow. So the
technically most.
Yeah, technically that is most. So again, like I said, I would not use that word, but
basically all.
So Reese, you said 10%, the top 10%. What about the top 1%? What percentage of the federal income tax do you think the top 1% paid? This is as of 2022.
30?
About 80.
Well, you both have great guesses. It's 40% of the federal income taxes is from the top 1%. And so the bottom 50%, just setting the stage here for what we're going to be talking about, the bottom 50% of earners in America, the average tax rate for federal income tax is 3 to 3.7%. And the top 1% average tax rate is 23 to 26%. So there's a range. I would call that a range. All right. You guys have any thoughts before we jump in? We got 5 of these we're going to go through, and we're going to try and keep them short and sweet so we can get to the vote. And I want to get you guys on the record with what you're going to say about some of these things. And so any thoughts before we dive into the first one?
Man, I just got to say, with all those taxes flowing in, the roads in Texas sure do not reflect that.
Well, this is actually one of the things I wanted to talk about before we get talking about anything else. We're talking about federal income tax today. And I did notice the income tax video I did on Monday, we had a lot of comments about property taxes. Although I didn't really touch on property taxes, but there was a lot of comments. People like, property taxes are terrible. We hate property taxes, which, I mean, yeah, taxes stink. I get that. That the property tax thing is a different situation, though, because that is your state. And I mean, take that up with your state government. I love state politics, state government stuff. We could talk that all day, but we are focusing on federal today. There is no federal property taxes at this moment. So if your state chooses to fund itself, we do have more power, realistically over the states than we do the government. But it kind of speaks to the fact that more back in the day, and the original idea of the republic is the states got to decide their destinies and their futures and what they wanted to do and how they wanted to fund things. And then the federal government had, a more restricted way in which it could raise revenue, but we've expanded that over time. So now it feels more like the federal government is bigger, more encroaching, and that takes up a larger chunk of your taxes. And then the states are also there trying to take as many taxes as you need as well, because they also need to function. And so we all end up feeling overtaxed. So we both owe the state and we owe the federal, and so I get why the combined high property taxes on states and high income taxes on the federal side is a really, really difficult tax burden for a lot of people.
Yeah. And the idea of property tax being federal tax just screams communism to me. Like, I really hope we never go that route.
Why don't we just sign over the land and then we'll just give you all the food you want?
Oh my gosh.
That is what happened in North Korea. Look how that turned out.
So we're going to be going through.
Let's dive into this.
We're going to be going through the 5. Before we jump in, Ryan, I want to say for those watching live, y'all vote along with us in the live chat, because we're going to be voting yay or nay. Do we think that this proposal is would potentially work to replace federal income tax? And if you're watching after the fact, y'all vote. Leave all 5 of your votes in a comment below, so we can see that as well. Yes or no. But yeah, Ryan, let's jump into it.
Yeah. So Doug or Troy, we got 5 of these we're going to go through. And I think you've got a little intro for the first one that we're going to use here. Do you want to go ahead and hit that? Consumption-based tax. I love it. Okay. Well, we'll find out if I love it or not. So
right.
I like the video. Let's get clear. Okay, let's dive right in. What is a consumption-based tax? So I think it's pretty self-explanatory if you just think about it, but it's one example would be a VAT tax or a value-added tax or a national sales tax. And so that would be a retail sales tax that would basically tax consumption rather than income. So you spend more, you pay more in taxes. You spend less, you pay less in taxes. And so the Federal Foundation's Growth and Opportunity Tax Reform Plan proposes replacing the income tax with a consumption-based tax, and that would estimate that it would even boost GDP by 2.5%, wages by 1.4%, and add 1.3 million jobs while maintaining similar revenue levels. Now, I'm going to go through some quick facts here, some pros and cons really quickly, and then we're going to get some discussion here. So I also threw in a few fun facts for each of these. I think you guys are going to like some of these. Estimated rate to replace the income tax would be around 23 to 30% national sales tax or 15 to 20% value-added tax. Now, I did not confirm if that was actually for just the federal income tax being eliminated or all income tax being eliminated. So maybe somebody can do some research here for me for that. But I can't imagine that that's just for the federal income.
It's just federal income tax. Yes.
Perfect. Okay.
Yeah.
So the Fair Tax Act that was already proposed a 23% inclusive national retail sales tax. So let's get some pros and cons. So it simplifies taxation. That's a pro. It incentivizes saving and taxing spending instead of earnings. If you spend more, you tax more. If you want to buy a yacht, you're going to pay more taxes. If you buy a rowboat, you're going to pay less in taxes. And so I just like saying rowboat. So cons would be critics argue that it is regressive and it disproportionately impacts lower income households unless paired with rebates or exemptions. And so we talked about already the disparity between who pays what. And so that there is some truth to that. They could end up paying more taxes. Another con would be a value-added tax or sales tax high enough to replace income tax revenue could lead to significant price increases. So that kind of goes without saying. I will say, here's some fun facts, okay? Sweden has a value-added tax of 25%, and they tax everything from funerals to baby diapers. So, well, I should say from diapers to funerals. That's kind of the right order. But
right, that's the best.
Depends on if you're Benjamin Button or not.
Oh,
right.
Wow.
So let's see. The United States, is the only country in the Organization for Economic Cooperation and Development, which is 38 member countries. They're the only country without a national consumption tax. Now, I'm not saying they all are doing it well, but that is just a fact. Okay. And before the 16th Amendment, and before the 16th Amendment, which brought the income tax in 1913, the U.S. government was primarily funded by tariffs and excise taxes, and it was a national consumption tax. So in 1870, whiskey, tobacco, and imported goods paid for most of the government. So
wow,
nice.
No one filed tax. No one filed tax returns. The IRS did not exist, and somehow America still functioned. Now, obviously, the globalization and there's lots of things different today. So, what do you guys think? Are we ready to vote, or do you guys want to go and tell me your thoughts?
I want about this. I think there's some more pros and cons to this.
I've got an opinion too. So
go for it, Troy.
Yeah, we'll speed the rest of these up. So
here's my major thoughts. Here's my major fear. Two major fears when it comes to this. I think it's very interesting, the idea of I don't have to pay any income taxes anymore, and only the people that are buying things are essentially paying the tax, and they're supplementing that half of the government's revenue, right? And so if you don't want to buy anything, guess what? You can save a lot of money, right? And it actually incentivizes that. But my first fear is, does it also decentivize a healthy, thriving economy? It's like that our economy is kind of thriving off of people buying things, consumers going out and spending money.
That was my gut instincts too.
And it's like, if all of a sudden we decentivize spending money, is that going to have a ripple effect on the economy that it's going to hurt more than it's going to help? That's my first thought. My second thought is, here's the other problem is, unless, and here the problem is, now you're adding more government regulation and all that kind of stuff. So it's supposed to be progressively better for low income households, right? Because they're not going to spend as much, right? But what if they just put more on a credit card based on a higher tax on what they bought, and they just buy the same things anyways? But now you've put a 30% tax onto a credit card bill, and the debt ratio becomes even worse for the low income households. That's my second fear is, now I'm going to buy the same things I was going to buy anyways because I've got a credit card, and now I just have to I have to pay more for it, right? And now I'm more in debt than before. And now we have an even higher personal debt issue happening in the States. Those are my two big fears.
Well, it is a what they call a regressive tax as opposed to progressive tax. So progressive tax is where you tax people that earn more money versus people that earn less money. And so it's a somewhat regressive, because people would say, well, you are taxing everybody at the same rate, right? You're taxing the poor people who earn no money. You're taxing them at the same rate as the rich people. And you're like, well, how are you taxing them? Well, you're not taxing their income. You're taxing on top of what they're spending. And yeah, poor people buy less stuff, but the rate of taxes that are added to what they're buying is the same. And so they're still paying.
Right. I'm sorry. I just convoluted terms. It becomes a little bit more progressive. It backs away from being a regressive tax when you start to add rebates for lower income people. Or prebates. They have like coupons essentially.
Lower income people, then
so that would be the way to fix part of that, and it becomes a little bit more progressive there. But no, you're right. Thank you for.
But that does become more complicated. One thing I like about this is, if you did, of course, do away with, I mean, I guess this would be the same for anything. If you completely did away with the income tax, then that saves us $280 billion a year, I think, on the current IRS budget. $230 billion a year on the current IRS budget. So you don't need the IRS anymore to keep track of that. But if you were having to do rebates for poorer income families and individuals that now are like, wait a second, everything just got more expensive, because they probably went from paying no income tax to now they're paying a significant chunk of sales tax on everything that they buy. So I think that's definitely a pretty big disadvantage for it. But
yeah, I think that the two examples that you gave, Troy, are inevitabilities in that scenario. I don't think it would actually, that I would almost guarantee those things would happen. And then in addition to that, if the point is to get taxes for the government to make money to like bring down national debt or whatever it is they want to do, then that's going to also backfire, because then people are going to stop spending as much. So it's not the numbers that you would have, like if you were to take the numbers right now of what we spend on goods as citizens in this country, and then be like, oh, well, if we take this whatever massive number and the tax from that and apply it to this scenario, then that works. It doesn't work, because that number of goods is going to drop, or that number of purchases is going to drop. And so you've got a smaller number to deal with now.
Yeah, I think it's interesting. If you go and do a degree in economics, or you take an economics class, they're going to give you all the reasoning and the formulas and the models that they use to make these decisions about economic policy and all these things. But then if you go and study the psychology of buying things, you find out that nobody uses logic and rationalism to make their decisions. So you have all these economic models. I suppose directionally they could be correct, but I just think it's kind of ironic and funny that we use all these logic things, but the average person really is more emotional in how they decide whether to buy things. So
true.
I actually think that's true. And in fact, I would argue that you might see an increase, even though that the price of things would go up, you might see an increase in people purchasing things, because think about all the people who now are taking more home because most
see the bank account go up.
Most people do not think in terms of how much money they actually make for the full year and do a budget. Most people actually think in terms of how much money they're taking home week by week, right?
Wow,
so if you take away the income tax and now they're not putting, and then, and that actually ends up helping some people. I don't think this is the government's job, but people that aren't very good with their money, it ends up helping them because they're putting money away, and then they end up getting, they're putting money away. They're giving money to the government, right? And then they end up getting their tax return and they get a percentage of that money back. And they're like, oh, cool, I still have the money. Whereas if they were getting it every week, they would have already spent it. Well, I think we actually would see an increase in spending, because you have a lot of people whose weekly salary, weekly paycheck would go up, right?
Right.
And then they'd be like, well, I make more money now because I pay less in taxes. And then they'd go out and buy more things, even though that things are more expensive.
Well, I think that we just ran into another problem, and then let's go ahead and vote if we can, because I want to get to the next one. But think about if you have an 8% sales tax on an item, right? You don't see that until after you get to checkout. You see the cost, you don't see the tax. If you have a 30%, you're going to buy some crap that you can't afford, right? Like you're going to be like, oh, $1,000 easy. I've got $1,000 in the bank account. And you get up to the checkout counter and it's $1,300,
That's an easy fix, though, because every other country, that's why people hate shopping in the United States from other countries. Every other country has sales tax calculated into the cost already.
Really?
Yeah. Well, and the reason being is because almost every other country has higher sales tax because they have the value added and all that stuff. So they have to calculate it in so people know what they're buying.
So I think
smaller. So
so we're ready for a vote here, I think. Now, just so you know, 50% of Americans, according to Market Watch studies, say they live paycheck to paycheck. So if you see that paycheck that's bigger, that bank account's going up, I think that's a good case for seeing how we could perhaps see the same spending. So, all right, who's ready for a vote? Are we doing the thumbs votes, or how are we doing
let's
this
do
vote?
the thumbs, like thumbs up or down for everybody.
Okay, is everybody ready? We're going to go on 3 or after 3? After 3. 1, 2, 3. Oh, you guys are all looking to see what we did? No, that doesn't work.
No, who's looking to see what we did?
Oh, maybe the camera's delayed. I'm going to go with a plus.
Okay, so all right. Two yeses and 2 nos. Y'all vote in the comments and let us know what you think.
I would say even with the downsides, I would say the reason I vote up is because I believe that it's better to tax things that you want decentivized than things that you want incentivized and make more money. Yeah, I don't want to decentivize people making more money. So when you tax income, it makes it to where people are less incentivized to work more and make more money because they know that's just more of that money is going to the government. If you decentivize purchasing stuff because it's higher, people still have to buy things, so the government's still going to get their money. But at least the incentive there is for people to save money instead of just So that's, in my opinion, it's a better incentives, and I think it's more fair all the way around. It's more like a fixed rate for everybody. So it's a thumbs up for me. Not a massive thumbs up, but it's a thumbs up.
I'm not sure. I think it's the answer by itself. I would say it could be a part of the solution. Are we ready to move on to the next one here?
Yeah, let's roll that next video.
Flat tax or simplified income. So let's dive into this. So flat tax on income. And the example I saw somebody put in here, I'm not sure who snuck into our notes here and put this, but it says Ukraine's 20% flat tax reform. So, yeah, okay.
Is that something that Ukraine did recently? They did a 20% flat tax?
It was back in, I think, 2004 that they started that. Okay, it's been a while. It's been over 20 years that they've been doing that.
So we know who snuck in there. Okay, so we know who snuck in there and did the majority of our notes today.
Okay. I just happen to know that off the top of my head. I mean,
Fun Ukraine facts. All right, well, we got that covered. Okay, so that broadens the tax base and it simplifies administration. and it maintains revenue. So let's get some pros in here. So it simplifies everything. You get one rate, one form, no loopholes. All right. You get lower compliance costs, so reduced need for accountants, tax software, or IRS admin costs. So we see the accountants in the back raising their hands saying, no way, we don't want that. But hey, we'll see. We also have eliminates double taxation on savings and investments like capital gains, dividends, and interests. We do have, however, some cons. Okay, so it is simpler, but it may not generate sufficient revenue without a high rate, like 25 to 28%. And so that could be needed. That's per the Tax Policy Center. It is often less progressive, which raises equality concerns. That's a pretty loaded term there, but I'll save that for another day. By the way, if you ask somebody to explain the difference between equality and equity, go ahead and listen to the word salad you will then hear following that. Okay. All right. Number 3, con, eliminating the IRS would require a new enforcement mechanism, which could replicate existing administrative burdens. Okay. I got some fun facts here. So the IRS commissioner, Billy Long, you guys know who that is? Well, he was appointed by the Senate recently, and he actually he wants to abolish the IRS and replace the current tax system with a national sales tax. So I thought that was very interesting.
He wants to replace it with a sales tax. Wow.
Yeah. Well, the
Not
point
a fixed
is
income, just sales.
Well, I think the main point there is, and I haven't dove into the details of what he really wants there, but I do know that he has said he wants to eliminate the IRS, which if you're going to have somebody running the IRS, having somebody who wants to eliminate it seems to be a good choice. So another fun fact, several Eastern European countries adopted flat taxes, and they experienced increased investment and simplified business environments. So that includes Estonia, Latvia, and Romania. So not all things equal, but those are some options that we have seen that working. So what are you guys' thoughts on this?
My first thought, which the reason I like it, so there's always two reasons. There's one, I don't like it, the idea of, again, you have the regressive problem where you mentioned the whole thing about equality, but you know, there's an argument to be made here. Like if you don't make very much money, right? And you don't make very much money, you still have to pay 20% of your income, right, to the government because of the fixed rate. I'm just making up a number here. If we say we did 20% fixed rate, maybe it's 15. The lower we could get, the better. But realistically, it's probably gonna have to be pretty high because they need to get a big chunk of the people who make tons of money. Because people who make tons of money, they need a big chunk of their money because that's what funds most of the government. So if the poor people are paying 20% and the rich people are paying 20%, well, it's easier, obviously, for the rich people to pay 20% because they can live off of the rest of their income much easier than somebody who's really dirt poor. And if they're paying 20% of their income, that's a bigger deal for them because they're already dirt poor. So 20% of their income is going to be like they need every dollar they can get, right? So I get the regressive argument there. I think there's probably some ways, to fill that in. But the thing I like that's most about it is it equals every type of income there is. Right now, we have a ridiculously stupid income a tax system where we tax different kinds of incomes differently. If you work, you get taxed more for working than you do for investing. Depending on what you're investing in. If you make money flipping houses, if you make money in the stock market, if you make money over here, make money over here, there's this whole ridiculous game that everyone plays once, especially wealthier people, once you get to where you have the means to do lots of investing, you have to play the game, you have to play the system because you want to invest your money in ways where you pay less taxes on it. And then you have to employ accountants, you have to employ people to figure all that out for you and figure out the tax code. So if we could simplify and say, if you make $1, doesn't matter if you worked for your $1, doesn't matter if you sold a house for your $1, doesn't matter if you got interest from CDs or whatever, it's income. If you make money, you pay the income tax on it. It's the same for everybody. I think it would simplify the entire financial system in a way that would be very beneficial, in my opinion.
Yeah, I think there'd be a huge pushback against it because if you look at I don't think it's possible. That's my response. I don't think it's possible to do it because at least not where we are today. Most people are going to fall into the lower category. Like what did we say earlier? The stats were, it was like 10%. The top 10% pay 50% or something like that. Whatever it was,
something like that.
And so it's like most people are going to fall.
The top 50%. Oh, sorry. The top 10% pay 70% of income.
Oh, the top 10% pay 70%, right?
Yeah.
Okay. So guess what? The top 10% are going to have a very small vote because it's only 10% of the people. You know what I mean? So like they're going to have a very small voice. Obviously, they have money behind what they're saying. They can put people into power sometimes. They can affect things like that. You know, they can put a lot more pressure. But as far as like the number of people like voting to make something happen or voting to put somebody in power that would do this, I think it would be very, very difficult to do because there's going to be a lot of pushback because all those people are going to say, I'm paying more taxes now, right? Like I'm paying more taxes than I was before. So I think for that reason, it would be very, very difficult to do. I understand it's fair, you know, like to me, I'm like, I am just a fair person in general, like black and white. So I'm like, whatever's fair is fair. I don't care how much money you make. Like it makes sense to me, to my brain, for everybody to pay the same percentage. And that sounds fair to me. But at the same time, I also have compassion for, you know, people that are making less, you know? So it's like, and I think there's a war inside my head. So I don't even know. I don't even know where I fall in that.
I think that I like the idea of that. I mean, my real answer would be kind of like, well, let's see what the number you're going to use is. If it's less than what I pay now, I'm for it. If it's more, I'm not for it. I guess the thing is, though, I mean, if you look at the Bible in Egypt, Joseph, representing God, he took 20% of the grain from the people. And so 20% was the same for everybody. I'm just saying that is a biblical number, perhaps. But I do. So I'm sort of for that, leaning toward that. So are we ready to vote?
Yeah. Well, I'll just say this: 1995 Hoover Institution. Did you mention that study, Ryan?
Nope.
They estimated a 19% flat tax could be revenue neutral, and now that was 1995 when they did that study a long time ago. But you know, I'm sure the number is at least somewhere in the ballpark. So it would be around a 20% flat tax. You know, like I think it really would if we were trying to.
I think our government spends a lot more money than we did back in 1995. We would have to do some significant we'd have to do significant cutting, I feel like, to get back to that point. I don't trust that number. The 1995 number, like I think if we didn't cut government spending, it would probably have to end up being higher than 20%. I would assume nowadays.
Which would suck. I mean, imagine trying to get the population to
it's true. You know, hold on. It's true percentage? Because from since 2020 to 2025, the US has spent $4.6 billion on luxury furniture, designer artwork, and picnic tables from top tier recliners and all that. So, I mean, you know, you're right. We do have spending that we didn't have in 1995.
Yeah, that's true.
We'll get into that problem.
Yeah, but it's only 25% of that stuff is used. That's the problem with it. It's like decoration. So, okay, go ahead. Back to whoever was going to make a real point.
Troy, you said this earlier. What was the top percentage for the people that make the most money? How much of their income goes to income tax? What's the rate that they're paying? Was it like upper 20 right now? Do you remember?
You're saying the top percentage?
Yeah, if I'm in the 1%, how much of my income is going to the federal government?
It's supposed to be around 40%.
40%. Okay, yeah.
Like so it's supposed to get up that high, but obviously they do a lot of different things to avoid it, you know.
Yeah, well, if you had a fixed rate one, then you know, that's cutting out. Well, yeah, but actually, you know, I think okay, so here's my last thought about this one. The fixed rate, what it does, it goes across all income, right? So it's harder to do the loopholes. It's harder to move you around and be like, well, I'm not making any money because I'm not working. I have the investments and then I put it over here and put it over there. It's if you do a fixed rate and you simplify the system, it makes it harder to avoid that kind of tax, in my opinion. So you might still be able to get enough money from the wealthiest people because right now they're 40%. That's really high, but they do a lot of things to try to avoid paying as much as they can. So
y'all ready to vote? Let's vote. All right, y'all vote in the comments. So on the first one, we had two no. So the consumption-based tax, we had 2 people vote no,
2 nay,
1
yay,
1 vote yes, and then somebody say I need more information. So from what I saw, all right. So we're voting. We've already got.
Ready? I'm going to count to 3, and then you drop it. 1, 2, 3.
Oh my gosh!
Same.
I sense a recurring theme here.
Yeah, that's crazy.
2 yes and 2 no.
My only caveat is we would have to cut the spending for the government to make sure that it never goes above 20%. That's my.
I'm okay with that.
Only caveat.
And Doug, when I said,
thank you for everyone in the chat who are voting. This is
keep it coming.
That y'all are having. I'm reading it along, but
keep them coming. So far we have covered 2. We covered replacing the federal income tax with a consumption-based tax and abolishing the IRS or with a flat tax. And so our simplified tax, income tax. So let's go ahead, Troy, and go on to number 3. All right, increasing government efficiency. I love the soundtrack on that. I'm gonna have to get one of those. Okay. Increasing government efficiency. That would include spending cuts and cracking down on tax evasions. So basically, eliminating income tax without replacement revenue would require cutting federal spending nearly by half. And so that accounts for about 43 to 50% of the revenue from these income taxes. So that means we would have to probably cut either Social Security, Medicare, defense, or other programs. And I'm going to get into some of the spending maybe that we're doing. We've talked a lot about that on this show, but some pros are actually DOGE has already shown that it's possible to cut spending, but it hasn't really been a complete success. I think their goal was like $1 to $2 trillion. And so far they claimed 55 billion or something like that.
Yeah.
But I think something else came back and said, well, even what they claimed, it's only 8% of that. So it's really on the government and those in the agencies to actually do the recommendations that DOGE is saying to go forward.
I'll say this for DOGE. One thing they have shown is if you don't try, it's not going to happen at all. But if you actually start doing it, then you're gonna start chipping away at it. So I think that's the problem. Is we don't just need DOGE one time around. We need we need a program in the government. And obviously adding another program is not always the most efficient thing to do, but we literally need they need a yearly audit where it's like, what can we cut every single year? And they're not even trying, there's no efficiency. There's no anything. And it's like, we need to literally have there's a DOGE season that the government goes through every single year. It's a 3-month long process where it's like, cut everything you can possibly cut. Yeah. And again, get around to the next year. And then the more they cut the year before, they get rewarded for that in some way, they get, you know what I mean? Like there's whichever department can cut the most gets the less cut, taken away from them. It's like, they need something some sort of incentive.
Yeah. So I think that you have something called zero-based budgeting. So most companies and departments, they start out with whatever the budget was from the previous year, and they just add something to it versus having to build the budget from nothing every single year, justify from zero what you want. So another thing here, a pro, is that about 260,000 federal employees accepted buyouts or early retirement. So you can probably guess who the largest employer in the United States is.
Right.
It's the federal government. So Walmart, it is the United States. Yeah. Walmart employs 1.6 million people in the United States, and the U.S. federal government employs 3 million people.
Wow.
So that's a lot of jobs. That's a lot of people.
A lot of jobs. And I've worked for the government before, and I can tell you, predominant majority of those people don't need to be there.
Yeah.
They don't need to be born in a check.
Simple as that. Well, all right. What about some cons? It's not all pros. So it's politically and socially contentious, and no major study shows that this is feasible without significant economic disruption. I will say that there's some fun facts. Yeah, that's right. Let's do another study. Let's do another study. That's why they say a lot of these drugs are safe. They haven't been proven not safe. Well, that's because nobody ever did a study on it. So that does not mean it's safe. Okay. I digress. Fun tax facts.
We're the guinea pigs.
Now that's another rabbit hole. So the fun tax facts. So the U.S. government spent over $2.3 million in 2023 to study how to make Barbie dolls more inclusive. And but they can't find a way to balance the budget. So I don't know. Priorities are priorities, Each year,
$2 million. That's chump change for them.
Yeah, chump change. That's nothing for a private company. For a private company to make the Barbie doll more inclusive. What, you got to be kidding me? Okay, now each year the IRS pays out over $20 billion with a B in fraudulent or erroneous refunds, and that's according to the Treasury Inspector General. So, do you know how much the NASA budget is every year? It's less than $20 billion.
Wow.
10 million?
Less than 20 billion. So we paid more out in fraud and erroneous refunds than the budget of NASA.
Dang.
So just saying.
Huge. That's crazy.
Yeah. So what do we think? You guys have other thoughts on this?
Well, I think I don't know enough about this or like how exactly they're going to cut down on like fraud, abuse, and then like tax evasion and stuff like that. But I did see, I talked about this on Monday. The two, well, we'll get into the one of them in a second. But one of the two things that Trump's Commerce Secretary listed as the ways that we could do away with the income tax. Now, of course, he was specifically talking about for people that make less than 150,000, not for everybody, because that's a lot more money that you have to make up for, because people that make over 150,000, they pay 70% of the income tax, right? So that's a significantly higher number that has to be replaced. But I digress. But one of the main things that he said was we can cut down on tax evasion, cut down on overseas, like people moving their money and their incomes overseas or whatever to try to avoid U.S. taxes. That kind of thing, cut down on fraud. I had to pull up some numbers real fast because I was like, what kind of numbers are we looking at here? And the estimates I found from just pulling up different articles, and they all seem to be like they came from the IRS at different times. Some of the estimates say they lose $600 billion a year to tax fraud, and other ones say $1 trillion. So somewhere between $600 billion and $1 trillion should be being paid to the IRS every year, but they're losing out on it because of tax fraud and because of tax evasion. And that's a huge number. I don't know how to stop that from happening, because you have to pay. You have to.
I do. I know how to stop that from happening.
Say what?
I know how to stop that from happening.
How do you stop it?
Remove taxes. No more fraud.
If there's no taxes, then there's no tax fraud, right? Tax evasion. But that's part of me is why I lean to go back towards the whole sales tax thing that we talked about before. Is that feels like it's harder to avoid than maybe the income tax, possibly, maybe. So that could cut down on the tax evasion right there. But that's a huge problem. I mean, it could be up to $1 trillion a year. That's half of the income tax to begin with. We're losing half the income tax to begin with, literally just because of tax fraud or tax evasion. I don't know how you stop that from happening.
Yeah, that is a good point. But we need to stop it from happening. It doesn't change the truth of it. It's like we need to figure out a way to stop it from happening as much as we can. $20 billion a year is insane. Another argument against the spending cuts and all that kind of stuff. Obviously, we saw this with Doge. A lot of it from the left, but not always from the left. But just the argument about it's going to disproportionately harm low-income families who rely on things like Medicaid and SNAP, Medicare. But at the same time, when you look at the amount of fraud, when it comes to all the government programs, it's like when we're talking about, I'm just making this clear for those listening more so. It's like when we're talking about government efficiency and cutting waste and cutting programs and fraud and stuff, like we are talking about a lot of times just the ways that stuff is being misused. Like when Doug said, yeah, it's like when Doug said not everybody that was working there needed to be working there, then it's like, well, that is a misuse of government funds. If you don't need 100 employees, you only need 20 to run in a government office. And it's like, why do you have a bunch of people sitting around? And
it's designed that way on purpose too. Just it's not just, I'm not just trying to say government employees don't do their job or whatever. Like, right, it actually is designed so that they intentionally hire more people than they need, because they have to keep the budget a certain way. And so there are people there who really don't need to be there because they just got a job and they're like, cool, what am I doing now? And it's like, well, go count this pallet of armor plates or whatever. And it's like, I already did that. Count it again. I don't know. Count it
again. Exactly. Yeah. It's a lack of efficiency systematically, it's like the system in place is encouraging. It's encouraging fraud and a lack of efficiency and a lack of accountability among the departments, and I think it's the same things happening with programs like Medicaid, SNAP, things like that. It's like there are people taking advantage of it, and when we're talking about it, we are prioritizing cutting the fraud, not just not just removing programs left and right.
And I think there's a lot of evidence for that recently. I've seen a lot of people's analysis and articles and stuff coming out basically about like the big beautiful bill, because everyone was criticizing that. And I've seen after the fact, after it's come out and they're starting to put it in place, there's a lot of people like middle of the road, moderate people, not necessarily conservative or liberal, that are just like, anybody that's saying that Republicans are trying to gut the safety net. That's what the left was trying to say. Like you're gutting the safety net of it. It's like, they're just not accurate. They're actually almost everything that they're cutting, everything that they're trying to do here is literally just removing people that shouldn't be on there, removing abuse, removing waste. But yeah, there definitely are people that are allergic to reducing there's an allergy to reducing the government funding when you believe so strongly that the government should just be so huge and spend so much money, and there's no way you can cut it, and cutting it is like somehow immoral. So
yeah, let's go ahead and vote. So as a reminder, we're not voting on whether we want this to occur or not. Obviously, we all want the spending cuts to happen. We all want efficiency to happen. We're voting on, do we think this is a possibility when it comes to getting to eliminating federal income tax? Do we think this could possibly get us there, or most of the way? So that's what we're voting on. Just as a reminder. So y'all vote in the comments, vote in the chat, and let us know what you think. What do y'all think? There's enough between spending cuts, efficiency, and then also reducing the tax fraud to get us there? Yes or no? Vote.
1, 2, 3.
Okay, I am going.
I'm surprised. I'm surprised.
I almost wanted to say yes. The reason I don't think there's enough to get us there is because I think it's just gonna be so hard to do it. I think that's the only reason. It's gonna be so hard for us, and we saw that this year as an example with Doge, with all of the people pushing back. It's like help make this make sense in my brain, where you're mad at us cutting waste just because there's a Republican president in power. That's the only reason why you're mad at us.
So ridiculous.
That's why it's such a political thing, that it's like you can't do a good thing if you're not if you don't have the right title in front of your name. Apparently.
I think if it's done right, it could work, but it has to be done right. And
we need an
actually done.
We need an AI overlord first that takes over the government for us, and then we can do it.
Yeah. There you go.
I think my biggest caveat with this one is it's clearly possible for reducing, so like 90% of people don't have to pay income tax. So go back to that number from before. If you're trying to remove all income tax, then you have to make up somehow for $2.4 trillion a year, because that's all income tax, not counting payroll tax. It's just income tax, not Social Security and Medicare. I'm counting that separately. But if you only want to cut income tax for 90% of the people that make less than like $170,000 a year, then you only have to make up for like $900 billion a year. And if you somehow took care of all the tax abuse, then that number makes up for it. That's $1 trillion a year we're wasting on tax abuse, tax evasion. If you make up for that, then we're good to go. But I don't know how you make up for that. Realistically speaking,
you have to spend.
I'm like, how do you track down that $1 trillion a year and make sure it's not being lost? I think you'd have to majorly simplify the tax system and make it much harder to avoid being taxed at those high levels. So,
yeah, I think I still agree with Warren Buffett, and this is not necessarily. Well, I'm not going to say whether this is one of our 5 options. We got 2 more to go, but he says very quickly we can balance the budget if we just say nobody in elected office in the federal government is eligible for re-election without a balanced budget. We would have it balanced very quickly. So, and also, there's this whole interest thing that we keep having to pay. So, all right, let's go ahead and jump into number 4. Wealth or asset-based taxes. I thought instead of money flying, you were going to have a dumpster fire or something. Maybe the Elmo thing again. So I guess you probably know where I stand. Let's dive into this though, because maybe I'll be convinced otherwise. So this is basically a wealth tax is a recurring tax on the total value of someone's assets. And so I've seen where that could include minus their debts or not minus their debts. And so it would be different forms, a different form of income tax. So basically, income tax is taxing what you earn, and wealth tax is taxing what you own. And so you could argue that property tax is already kind of a wealth tax because you own real estate. But it would include stocks, bonds, mutual funds, business ownership, capital gains, inheritances, all that sort of stuff. And so let's jump into some pros and cons. So one pro, I'm not sure where we dug into this, but it says it is one way to target the people with the money. I'm not sure how that's a pro, but somebody put that in there. And
I wrote that.
Oh,
Ryan,
that's right. Okay.
And
Well, it does target people with the money.
I thought Elizabeth
with
Warren
money own things.
snuck into our notes. I thought Elizabeth Warren snuck into our notes.
No. Sorry, I meant to write that as some people are going to view that as a pro because that's what some people want to do.
I'll update that.
Some people's whole thing is here's how we fund the government is target the people with the money, right?
It is
We already target the people with the money.
We already do.
Okay.
So Estonia. 40% if they have money, if they make lots of money. We tax people almost nothing if they don't make lots of money because we give them that is a normal tax thing. People usually try to go after the people that have money because
you get on government. You get on any forum about taxes on the internet, and half the responses are, let's just tax the wealthy more. Like half the comments are that. And so it's like that is to a lot of people that would seem like a benefit.
That is the answer for them. Okay.
Right.
So Estonia, it says here, Estonia taxes inherited assets, but only when they're sold, which simplifies the administration. But that, I mean, I think that makes a lot more sense than just taxing it because it went from one person to another in an inheritance. Oftentimes people can't even afford to pay the taxes on the inheritance. They have to sell it to even get money to pay for the tax to inherit it. Okay, so let's get some cons here. So it potentially destroys capitalism, kind of a minor note. A footnote, Thus, the economy through the capitalism and the economy destroyed through demotivating investing and moving assets out of the country. I have an example of that. We're going to talk about France in a little bit here. So, wealth taxes.
Notice that I didn't give you any facts on this one. I just gave you my opinion.
I like it says wealth taxes face value. Don't worry, I had to go get some facts. I was like, feelings are facts. Feelings are facts. I don't know. We'll do both here. Okay. Wealth taxes, face valuation, challenges, and legal hurdles and potential capital flight. So again, leaving the country. Studies suggest that it generates limited revenue compared to income taxes, and it does not incentivize U.S. investment. So let's talk about a fun tax fact. France actually had a wealth tax for decades until the rich left their country. So let's see. France repealed the act in 2018 after realizing, over 42,000 millionaires left France between the year 2000 and 2017. 42,000 millionaires. So then France noticed that. And so then they repealed the tax act, the wealth tax in 2018 after realizing it raised a little revenue, but cost billions in lost investment. So kind of a big deal. I mentioned Elizabeth Warren, U.S. Senator Elizabeth Warren. She proposed a 2% wealth tax on households worth over $50 million, which would raise less than 12% of what the federal income tax brings in, which is absurd. But I noticed that her net worth is conveniently slightly below. It's 9 to 12 million for her. So I don't know. I thought maybe she would have went down a little more and capped it at 15 million, but she must be planning to raise her income a little bit.
Senators could just, in the bill, they could just say it doesn't apply to senators.
So
they could just exclude themselves.
So ridiculous. Yeah, that would make sense.
At that point, they could just exclude themselves.
That makes sense for like an HOA board, which is a volunteer position. I agree. They shouldn't have to pay. If you're leading your homeowner association, you shouldn't have to pay your dues. Okay. You're volunteering. Senators not volunteering. So, all right. What do you guys think? Any other comments before we vote on this one?
Yeah, this one, I know people who think like this, and I'm not like trying to bash on that or anything, but I don't understand how we can't just understand the concept that when you penalize the one people group that can do something about it and skirt around it, it's not going to work. You just can't. It doesn't even make.
They always have an option. They always have an option to get up and put down their stakes somewhere else. That.
Well, you're gonna be like, fine, I'll just go get on my yacht and take off across the waters and go find somewhere else to park. Like whatever.
Like you want to incentivize them staying in your country, building businesses, spending their money where they are. Like you want to incentivize those things. And if
making
you're not,
income in that area,
if you're not, then you're going to destroy your nation from the bottom up. Like it's like the foundational aspects are going to start crumbling.
And unless we all forget that these are the people, it's not even like super extremely elite wealthy. It's people who own regular businesses who give you a job.
Right. No, I'm not saying
that's the biggest issue for it with me, because the fact that it's assets, because if you were just trying to tax people, say like on piles of money, for instance, it'd be like, oh, there's people that have massive piles of money and we need revenue. So we're going to tax the people who have massive piles of money. Okay, that's something. I don't know if that's good or not, but that's an idea. Okay. Well, the problem is there is nobody with massive piles of money. There's no person that just has tons and tons of money in a bank, because once you get up to a certain level, you put all of that money into businesses, you put it all into investments, you put it all into assets, right? And so that's the issue. Is what you're doing is you're causing mid millionaires to the upper billionaires who invest heavily into our economy are the ones that allow for business to exist and allow for buildings to be built and all these things. They completely disincentivize any of that occurring, because they're like, oh, me owning things and investing in things, I now have to pay taxes on just holding it and just existing. Well, I'm going to sell all my assets, and then I don't have to pay any taxes anymore. Boom.
Yeah.
So, and then
all you have to do is move your money
overseas.
All I have to do is move my money to a Swiss bank account, and now I don't have to pay taxes on that either.
And we're not even going into the Federal Reserve and all this kind of thing. But do you know what fractional reserve lending is? Have you heard that term?
Yes.
Fractional reserve lending. So that means a bank, that is a fancy term. That means the bank only has to have 10% deposits of what it loans out. So that means I take a check to a bank for $10,000. I deposit $10,000. They can loan out $100,000 and get interest payments on $100,000. So Greece goes and gets that $100,000 loan. And then he goes to another bank, deposits it there. Now they can loan out $1 million on that $100,000. And it's all fake money.
It's the matrix.
It's crazy.
So
it's the biggest Ponzi scheme.
I guess we all should have went into private banking. So yeah, that's kind of the problem here.
So I'm not 100% against any form of wealth tax at all, and I'll because I think there's pros and cons to having the property taxes be a state tax, right? So I would like to see property tax eliminated, but I understand that we need to replace it with something else before we can do that, or as we're doing it, So I'm not 100% against it, but I am 100% against large wealth tax and high, like if you could keep it controlled somehow and do small amounts here and there, that'd be fine. But I just don't see that being the case. And we did a whole episode on that with Australia, the capital gains tax happening in Australia this year. If y'all want to see how passionate I am about this topic, I screamed for an hour about it while Doug Reese and Ryan listened to me rant. Because they're implementing it there, and it's just such a dangerous idea, and it's a super slippery slope.
That one was even worse though, because that was tax on unrealized gains.
Unrealized, it's even worse. Right.
Yeah.
But this one does potentially include that. Like that is, if you look into it, it does potentially include unrealized capital gains.
That's the next natural step, and that's exactly what I thought of. I was like, we're just one step away from unrealized gains at that point.
Yeah, and in a way, it is unrealized gains because you're being taxed on having assets, not on making money.
So then you have to value the assets.
I'm holding a business, even if my business doesn't make money. Well, your business, all your assets combined, cost $1 million. So you're being taxed
valued at that.
Even if you lost money this year, I'll be like, well, my business actually lost money this year. It's like, it doesn't matter. You still own the building. So you have to pay taxes on it.
You have to pay taxes on, and you didn't make any money. Exactly. Where's your money?
That's absurd.
Assets to cover it. And here's the other bad thing is that we're talking about government efficiency and like we need to cut costs. We need to be more efficient. But think of the administration costs that go up when you have to now value everybody's assets of any kind. It's like, I've got this old Chevy, 1982 truck that, there's only one in the world, and I don't know what the value is of it or whatever. It's like the government has to figure that out now.
Yeah,
let me push back on that one though a little bit. I don't disagree with the concept, but I have a speculation. This is a prediction. I really truly believe that AI is going to take over the entire valuation system. And I mean for houses and everything, because I have my license as an appraiser, and I've been looking at how to use, you can use AI very, very quickly and easily to value everything.
So you're saying we need to all get on AI's good side so it'll be lenient on us.
No, it could be more efficient though. That'd be good. All right, let's vote on this one. I want to see thumbs up or thumbs down.
That's interesting. Okay, so we are talking about whether wealth and asset-based taxes is good for us to replace the federal income tax or not. So let's go ahead. 1, 2, 3.
Wow,
unanimous.
Shocker.
Unanimous. That is fascinating.
I'm not against all property taxes. If I think states,
neither are communists, so that's fine.
States are good if they want to do property taxes. There's pros and cons. There's pros and cons to it. I know a lot of people hate property taxes.
Yeah.
I think there are probably better taxes out there, but yeah, the amount that you would have to replace income tax, it would be crazy high property tax or crazy high asset tax, and that the incentive is just sell everything and move overseas. That's the incentive.
I think it helps to kind of give some of the personal bias, get that out of the way a little bit too. So I will say I have this view on the wealth tax as somebody who's not over here sitting on millions of dollars. So it's not like I'm, you know what I mean?
Yeah.
It's like I'm not in that upper class, whatever, so it's like,
well, that's why most people support it. Most people support it because they think it won't affect them.
Right.
They're like, well, I don't own $1 million in assets, so I won't have to pay taxes anymore. It's like, well, it won't affect you until the economy collapses. Then it will affect you. So
Exactly.
We've got only thumbs down in the comments section.
All right, so let's move on to
good.
number 5.
All right. So we got number 5. It's our final one here. Let's dive into it. Tariffs. What a fun buzzword that now everybody is talking about. Thank you to Donald Trump. So what tariffs are? The tariffs are, he's the president of the United States.
Okay, I haven't heard of him.
Yeah, he's vaguely familiar for you. Okay, so tariff is a tax on a imported good. That's really that simple. And so according to the nonpartisan Peterson Institute for International Economics, they found that 50% tariffs would, it says maximize revenue. So basically that is what's needed in order to meet the revenue, which would raise about 780 billion in tariff revenues annually. And so far Trump's plan is getting better trade deals, and he's putting 15% on most countries who commit to investing in the U.S. and buying U.S. goods. So higher tariffs on countries that don't. So let's give a couple of details here. So tariffs in 2023, I found that it was around $80 billion in revenue. I don't know if you guys found something equal to that. The income tax, again, was 2.4 trillion. The current average tax or tariff rate is 2.3% on imported goods. So that's that's changing based on all of these things that are happening. And the total U.S. imports in 2023 was 3.8 trillion. So lots of imports we have being taken advantage of by lots of people. And I think that's a lot of what Trump's trying to do, is to use this as a negotiating tactic to put trade agreements where they should have been, just based on morals and ethics alone. So let's get into some pros here and some cons. So the first set of pros we have is the raising revenues and encourages domestic manufacturing. So not all countries respect human rights like the U.S., China. So, excuse me, I had a little something there. And also some of the goods undercut the domestic manufacturing. And so that's bad for U.S. businesses. That's also immoral. And so that was a big problem. We talked about how some of the Bushes were involved in selling out the U.S. Over to China. So we also have national security, which is a pro. So specific tariffs like steel, technology, medicines, that sort of thing are what can help strengthen national security. And so that encourages domestic production. And so we're not entirely reliant on nations that are hostile to us and not exactly on the ally side. So some cons are that we lose some benefits of global free trade. You lose some specialization. So some countries are just better at growing and making different goods. For example, Italy makes better olive oil than Russia. So that's one example. You also have
better vodka, though.
Well, that's the idea. If there's no tariffs, then you get cheap olive oil from Italy, you get cheap olive oil from Russia. Win-win, right? If that's the free trade specialization.
Yeah, the quality, the market would decide what wins there, not just the people making the trade agreement.
Yeah.
So let's see. It's still basically a con. It's still a sales tax on that it can increase the cost of goods. So it can discourage production or it can increase the cost. So sometimes we have to buy a more expensive domestic version, which we can debate. You used to be able to buy a washer and dryer that would last for 30 years. And now the ones that make it don't even tell you it's supposed to last more than 6 years or 7 years.
You have a 1 year warranty. 1 year warranty.
Right. And so, things are different. It's more of a consumable good now. And so whether that's good or bad, you
can't eat it.
Well, That's right. I would not recommend it. Consumable as in you replace it. It's not a lifetime thing. Okay, so and also number 3 has unintended consequences that can hurt manufacturing and businesses in the U.S. So we produce things in the U.S. that are also made by importing goods. So like a tractor, for example, is made by 70% of purchased goods. Well, a lot of those are coming from overseas. So some components you can't even get made in the U.S., like some bicycle components or some internal engine components, those sorts of things, just because it's been gutted. And so there is also a potential trade war that could happen with retaliatory tariffs. So lots of fun pros and cons there. I've got a couple of fun facts, tax facts. So before 1913, you probably have all heard this, but tariffs funded up to 90% of the entire federal budget. So the U.S. government ran without income tax for 124 years. And again, that was mainly from taxing whiskey, sugar, and imports. And so Abraham Lincoln funded the Civil War with tariffs and excise taxes, not income taxes. So obviously, we're a lot more globalized today. We have a lot more trade. It's a flatter world, so to speak. And so, yeah, what do you guys think about this? I saw Doug laugh at that. We'll move on. Let's move on quickly.
Yeah, we had somebody, we did another episode on tariffs this week. We had somebody push back, kind of like raising the question, like trillions of dollars pouring in from where? And their point was, we pay the tariffs, right? And they were like, you think companies exporting into the United States are paying the tariffs to us? That, and they're like essentially saying it's a tax on the American people, right?
Yeah, it's like a sales tax. It's just like literally tariffs are a sales tax, but they're just there's a tax on sales, people selling things to us instead of just domestic stuff. So it encourages inter-domestic buying because your domestic stuff will be cheaper, by example. But yeah, it is just a sales tax. Right. It's a sales tax on foreign goods. So, and but yes, we are paying. We pay the tariff.
Well, yeah, except it's not always that simple. Like I actually did a little research and found out when the contract does not explicitly address the tariff responsibility, the economic burden becomes a matter of negotiation between the foreign exporter and the U.S. importer. So it can be a mix. It can be we're paying half, y'all are paying half, or it can be bake it into the price, or we're going to bake it into the price, or whatever. So there's a lot of wiggle room there for it to look a little different than what you would assume.
Go ahead.
That's fair.
But then also it is in my mind, it's like you could try to push 100% of that cost onto the consumer, right? The business could say, well, we're just going to up all the prices. And that would work for items you can't get anywhere else, but it's not going to it's not going to 100% work for your essentials. Why? Because the essentials, there are so many competing competitors in the market that they're going to work their butts off to give you the best price because they know you have to buy this item so that you're going to go buy from them because they're $3 cheaper than all the other companies. So it ends up being a mix of, yes, some of the goods can go up in price, but also there's kind of a split and a share between the exporter, the importer, and the consumer. So it ends up not being, people are saying like, well, all of that, it's just a tax directly on the consumer. And it's like, it's not necessarily the case.
No. But I want to say this too, though, is that having tariffs drives behavior of companies. So they have to decide where are they going to put a factory to produce whatever said thing is. And so like literally I worked for a Fortune 100 company and we were talking with suppliers saying, we don't want to pay to ship this across the world. You need to put a factory here in the US close to our factory. And by the way, we have another factory that's buying your product over in Europe. So we need a factory there too. And so depending on the purchasing power and the incentives, like a company I was working with, they were looking at whether the supplier was going to put it on the border in Mexico. The question was whether it's going to be in the U.S. or whether it's going to be in Mexico. And then they look at different states. Which state are we going to put it in? Well, it depends on what the incentives are going to be and what they're going to do. And so that's a whole thing that starts happening there. But I think I like what you pointed out about the paying. Who's going to pay? It's a negotiation. Like I found out. So we would buy, say we bought a few $1 million worth of a single part. And then we found out, that price was wrong. We need to actually increase or decrease that price. And we didn't pay enough for it. Well, the U.S. government, if you go back and retroactively change prices when you bought something internationally, it's a big deal. And they can actually stop the shipments from coming in because that looks like you're trying to avoid paying tariffs on it. Because now I'm just going to write a check or taxes on it, whether it's a tariff or a regular tax or whatever. But now it looks like I'm just, hey, you know what? We'll buy them for $50. Oh, it was supposed to be $75. Well, here's your extra $25 per one. By the way, we didn't have to pay taxes on that now. So that's the way the government sees it. And so it's a big deal. And so it's kind of like you can get red channeled and kind of have shipment issues and all kinds of stuff. But I think that's a great point, Troy, that it becomes a negotiation at that point. It's not so black and white. But the idea is, though, is that it's
exactly it's a negotiation because think about it. The exporter is not just going to be like, oh, well, we don't need to sell our goods anymore. You know what I mean? Like they understand that the American market is one of their top markets most of the time. In a lot of cases,
we are the biggest consumer in the world.
Biggest consumer in the world. And that's what Trump is playing off of, is that exporters want to sell their goods to the United States, even if they have to make less money doing it. You know, it's like, even if they have to take a cut.
And look at this. If you look at the value, so dollars, if you look at like a multinational corporation, they have a natural hedge in the currency fluctuations. So they may have euro dollars that they're buying in. They may have Canadian dollars. They have US dollars. They might have other, Chinese yuan or renminbi or whatever. And they have a natural hedge against that. But a company in India they want to sell in dollars, or they want to sell to the US, because even if they're having to pay more in taxes, they're getting that money in dollars, USD, and that's more stable. And so then they would have to have a hedge or pay a bank to hedge against it or whatever it is. So there's a whole nother other fluctuations that happen there. And I think the whole point is, I think Trump is using tariffs to create an environment that should have already existed if the US didn't let themselves get taken advantage of. And so it's kind of like threaten these tariffs, willing to do it, but if the companies come into line, then we don't have to do it. But they're operating, then not taking advantage of the US the way they should have already been operating.
Yeah.
Y'all want to vote? We're over.
You ready?
We're over that hour mark. So let's
do
wrap
it.
this up.
All right. So our tariffs a good way for us to help eliminate the federal income tax. Ready? 1, 2, 3.
We got 3 yeses and 1 no. Y'all let us know in the comments what y'all think.
I'll explain my no, because I'll say on one hand, I really love what Trump is doing with tariffs. I think he's doing the right thing with tariffs. And I think he's doing them really well, because if you have really high tariffs, you end up having some negatives that come from that. And I won't explain all of that. But what he's doing is he's forcing these trade deals, and he's getting 15% tariffs on things, 50% tariffs on specific items. But with the companies that have come to the table, 15% tariffs, we're pulling in a lot of revenue from those tariffs, which is great. He's getting better trade deals, investment in the United States. I love what he's doing with the tariffs. I vote no, because I do not believe nowadays that tariffs can replace the federal income tax. And here's why. The estimate right now from all of the things that Trump is doing, we're pulling in way more money. I think like twice as much as we usually do from tariffs. We're still only going to pull in, I think it was $240 billion this year in tariffs. That's only $240 billion this year. We need to replace $2.4 trillion to replace the income tax, or $900 billion to replace it for 90% of people. So here's the issue is the tariffs are great. More revenue from tariffs is great. I love what he's doing with the tariffs. Realistically, he is settling now for 15% tariffs, which I think is reasonable. He's getting investments in the United States. We're still putting tariffs on people. It helps the local economy. It does all these great things. It's not going to be able to get to the level that we need to completely replace the income tax. That earlier number you guys were talking about, Abraham Lincoln, he funded the government with tariffs and with excise tax. That's fantastic. He was able to do that because the government spent almost no money compared to what they do today. So so it's not a revenue issue. It's entirely, like Ryan says all the time, it's entirely a spending issue. If we got back to where the federal government was spending a fraction of what they spend now, then we could fund the government through tariffs and excise tax. We already have the excise tax on gasoline, tobacco, alcohol. Like we could fund it on tariffs and excise taxes, but then that's not a tariff issue. That's not, we need more tariffs. That's, we need to cut spending. So that's the reason I voted no. I mean, it's a drop in the bucket, but it's not $240 billion a year is not going to replace the income tax.
I 100% agree with you, Reese. Yeah. In my mind, I'm thinking, what's the best option to shoot for? Shoot for the moon. Right. And then if you get halfway there, then it's like you've just solved half the problem. And I would put it in that category, tariffs. I don't think it's going to get us all the way there. If I had to vote, but I'm voting in my mind as to what's the best option to move towards, and
you're voting for the most ideal version of the thing. And that's what I was going to say, is like, when you simplify it to that point, Reese, like you're saying, then I would agree with that too. But I was voting yes on the complexity of tariffs and everything that comes after that, and the unraveling of what the tariffs are doing generally. And also, in addition to that, hopefully if you were to combine my yes votes and my no votes and like put it all together, I think that makes a nice, pretty like approach. You know what I mean? Like, so that yes, on government efficiency means that 2.4 trillion or whatever dollars that we need to make up for, quote unquote, with income tax should go down, because we shouldn't need that much.
For sure.
Right.
For sure.
So then you put all that together, but it's a very complex thing. And I think that it's just those two things put together will get us there if done correctly and in the most ideal version of that possible.
Sure.
Yeah. Eric Scott says, for me, I'm wondering about what truly is going to be the cost of the consumer, which I think we all kind of are. We all have that question in the back of our mind. I think it's a good question to ask. And a year or two from now, I'm going to be very interested to see, can we see a real answer to that question? Give us more information.
Yeah, I do think that there is a global purchasing reordering happening. We're kind of like in the like a third new way of the way of global trade. It's a whole new system that's being set up now. And so I agree, it's not by itself going to solve anything. So we all caveated our yeses for this one here, but I think that we know we got to do something, and continuing the way things are, we know it's not going to work. So do you guys have any final comments before we sign off here?
I think you're right, Ryan. I think it's a restructuring. Definitely going to be some pros and cons in that. I love a lot of the pros, and I think long term, the tariff situation, I know we put that one as like the one that's already working, because it's already working. It's already restructuring things. It is raising some revenue that it could eventually replace the income. But there always is going to be the shaking and the cons and the things. Like I was seeing complaints on the video I put out on Monday, people talking about, well, steel prices have gone up, and they use a lot of steel in their business or their industry. So they're like, when they think about tariffs, the only thing they think about is the fact that they're now paying way more in steel, and that's hurting their business. And it's like, well, that sucks. That's like a unfortunate short-term situation that's occurring there. But also my hope is long-term that this is going to be a good thing. So, and I really, truly believe long-term the tariffs are going to be a good thing. But
I think that on the tariff thing, another angle that isn't thought about as often is the quality of products. And so when you do tariffs, you kind of essentially force many companies to produce in the United States. And hopefully the idea is that what they produce then becomes a better quality product. And I use refrigerators for an example. Refrigerators are extremely expensive. And I personally believe that things like refrigerators they're designed to fail at a certain time frame. So when we think of tariffs, we think of the store, so if buying
like when you go out of town, that's when they fail.
What's that?
Like when you go out of town, that's the time frame. Yeah.
Seriously. So if you bought a refrigerator
they're designed to fail
your lifetime, then you're not spending that $2,000 every 5 years on a new refrigerator, right?
I want to take our fridge out back and shoot it right now, and we've only had it for about 6 months. I'm not even kidding. It's a cheaper fridge. It's not super expensive, but we bought it 6 months ago because we gave somebody our old fridge. And I'm like, I wish I could have my old fridge back now at this point, because it was better than the one I've got now. It's just, it's crazy.
So if things are made to last, then you're not spending the money. And that's just one example of all the many things. If they were just better quality products because they were made in the USA with USA materials, you know what I mean? And that's a whole lot better situation. If it works out that way, that's what
iPhone is probably the best example. iPhone is the best example of we are planning on, and I don't even think they're planning on it so much as they are. It's not even a plan; it's a strategy, and it's implemented very strategically. Like the updates are not meant to help you; the updates are meant to break your phone, so that because they can't, they're like, "Oh, sorry, you just updated, and your hardware doesn't run this software very well, so now you're going to have to buy a new phone."
I don't update my phones.
Crazy.
Anyway, man,
we enjoyed making this show.
Super fun.
So to everyone who was saying, I really enjoyed this show. Thank you. We enjoyed making it. We enjoyed hanging out with y'all. So yeah, we're gonna finish it though, and we'll see y'all next time.
Yeah. Thank you. God bless.